I can't introduce our panel better than that. You'll understand why they call him Crazy John in a second, but thank you everybody for being here. I know it's after lunch. We're going to keep this panel energetic, as you see. I love the beginning.
We're going to wake you up.
We're going to wake you up. We're going to get into it. We're going to keep the topic to the topic, as you see. We got some great panelists, and we'll go down the road. But as we know, follow the money, and you will get your answer. You've heard that before. Capital is not about hype, right? In blockchain, in Web3, and I'll add a subsector which is doing really well, working with blockchain and Web3, and obviously AI. But hype is short-term, and capital and narrative seems to outlive forever. Branding does its job, and capital seems to follow. So not all money is created equal. At the same time, follow the money, and you'll get your answer. So I'm going to get right into it, and we'll let our panelists introduce themselves while answering a question. But if we're going to just speak about Web3 and blockchain specifically, crypto, it's obviously from a startup perspective, innovation perspective, and growth perspective in its winter. I'm not talking about price action. I'm talking about innovation. But if you look at the industry as a whole, take whatever subcategory you want, is this kind of a buy the dip moment from an investor standpoint? You're able to get some startups at pennies on the dollar if they're still around. Runways have dried up. Good founders are now in Silicon Valley or traditional, TradFi in New York, and or have been ignorant to running their companies. Some are still alive, some doing very well. But is this kind of the buy the dip moment? And it's a toss up, and please do a quick introduction, and if you would like to answer your question. I'll start picking on you guys. Crazy John, let's get you started.
Thanks for being actually with us, everyone. And where are you guys from?
I'm from
Vietnam,
Los Angeles.
Right? Yeah, so everybody, I really appreciate. I've been supporting TEAMZ Summit for 10 years now. So last year I brought Satsuki Katayama, minister of the finance in Japan. We had a fireside chat after she came back here from United States, met Trump. So people call me Crazy John. I was one of the youngest professor in the history of Japan 10 years ago teaching entrepreneurship. Now I'm helping many family offices around the world. We invest a lot for traditional finance, real estates, and I'm also advisor of 15 different venture capitals. One most famous one for crypto is the CVVC in Switzerland, in Crypto Valley. We invest in crypto, 79 startups, and I'm also helping many startups. So thank you so much today.
So answer the question, does this feel like a buy the dip moment? Are you looking at some startups, whether pre-seed, A, B, whatever, that are not doing well, or that you still believe in, that you can get in at a previous round or a discount to premium on future rounds? Does this feel like that moment or no?
Yes.
Right. Is there any one startup sector that feels like it's more on discount within Web3?
Yeah, DeFi and CeFi and these kind of things, still we can do it. And also sooner we're gonna need to invest Web3 and crypto / AI. Yeah.
Nico, you wanna?
Yep. Okay, so I'll introduce myself first. I'm Nicolas Gallet. I'm running Gallet Capital. I am a former banker. I used to be running a global trading desk for 25 years in various banks, Japanese, American. And I started in a Web3 5 years ago. We are more of a defensive approach on investment, and the crypto space is definitely the frontier part of our portfolio. I will not say that I'm in a distress investment, so I'm not trying to pick a company in trouble or a company which has failed to find their go-to-market. If I have to just recenter on what I'm looking at the moment, because it's my core expertise is still DeFi, but specific stuff. What has been, in fact, causing one of the reasons of this recent winter is this constant search of APY, high yield, and I think the economy is recognizing that the yield is not the product, that the risk is the product. So I'm really focusing a lot on this aspect, risk-fi, credit curve generation, really a creation of a real sophisticated capital market, which will mean regulation, unfortunately, for the fan of decentralization, and as well as insurance. So that's one topic that I'm really focused on.
And I appreciate you saying, because I wanted to make sure it's not just about the distress side, right? But the future rounds that maybe were announced but have been pulled back, and now they're saying, hey, we'll give you the last round, right? So, Ciara, I wanted to add a line to that, because topics in Web3 don't just mean products like DeFi, infra, security, but they also were DATs, you know. And Japan here did quite well and also very energetic about the treasuries that were in digital assets. So introduce yourself and tell me what you think about that topic as well.
Sure. Hi everyone, I'm Ciara Sun, founder and managing partner of C Square Ventures. We are both a VC and liquid fund in Web3. And prior to that, I run listing, investment, institutional business, and global markets for Huobi, and started my career in traditional finance, management consulting in New York. So I actually had a mixed background of traditional finance and crypto. As for DAT companies, I think it's quite interesting. It was such a hype in like late 2014, 2015. We see every country was trying to launch a DAT company. For Solana itself, there were 200 of them in the pipeline. And in the beginning, they were actually able to raise more capital because in upmarket, the whole structure worked, right? You'll be able to issue more stocks and use it to buy more tokens, and NAV looks good. However, I think the whole reason it didn't really work out, and some of them are going through consolidations, is because the rules of not just regulations, but how to actually manage those companies is not very clear. For example, how do you issue the stocks? What time can you buy the tokens, and who can manage those buys and sells? And how do you issue stocks back to your equity holders? All of that is not very clear. So there's a constant delay for getting the shares you actually own, and then there's a constant delay for getting listed on local exchanges. And to be honest, we don't need that many DAT companies for one token, right? And also, there's no real revenue generating powers behind those companies. So like all those reasons combined is not really working.
So what are your real thoughts about MicroStrategy? No, we'll leave that. If you want to answer that.
Well, I think MicroStrategy is a different case. They started so early, way early. They have the first mover advantage. And I think one of the core for running a DAT company is your ability to keep raising more money. And Michael has the ability to do that, and they've never really had any like real challenges of approaching that break point. So I think it's working. It's fine for them.
I'm going to switch gears for the next two panelists, and because it's a massive topic that's also really a foundational layer for a lot of the things everybody's investing in and building. I know you have a massive gaming background and you're divesting into other things. However, this still does not change, and that's the topic of stablecoins. And you do live in Japan with American exposure in the past. You're in Singapore as well, which are two massive plays and regulatory bodies that are tackling the stablecoining. When you have stablecoins and the volume that are now beating the Visa MasterCards, and you're now having some of the largest, Tether owns the 15th most, U.S. treasuries, and they're becoming some of the biggest value investors outside of just offering you a stablecoin. What does that look like to you from an investment perspective, from gaming or DeFi or whatever? It seems like that is the winner in all of this. It has to touch some type of stablecoin, and obviously that being backed by a regulatory body.
Yeah, sure. So quick introduction. My name is Justin Waldron. I'm one of the co-founders of Zynga, a mobile social gaming company started about 20 years ago. We make games like Farmville, Words with Friends, Mafia Wars, Cityville. There's a bunch of them. Over 1 billion people played the games we made at Zynga. More recently, it's become part of Take-Two, which is the publisher of GTA 6. So my background's in games, but it's really just consumer software. Zynga was kind of like a social networking team that then decided to figure out how to make games and distribute them on the web. That's a new way of monetizing them through virtual goods. When I think about what's interesting about where stablecoins are going, it's more about the new types of products people can build. So certainly there'll be a lot of infrastructure that just lets us do modern banking in a better way with existing institutions and new institutions. But from a product builder perspective, I think what's really interesting is how composable these things are. So I was an early investor in Privy, the company that Stripe bought recently, which makes it super easy to have a non-custodial wallet. If you're a developer, the APIs are very, very simple. And what we see some people doing in the space with this is building products you couldn't have built before. So a good example I'll give you is there's an app called Bags on Solana, and it's been possible to make a token, launch a token for someone's X account, where then the trading fees are accruing to this person's X account, even though they've never actually logged in or created their own wallet in Bags. And this has allowed people to create tokens that then contribute to people who haven't yet onboarded into crypto. This is a really, really interesting underpriced mechanism, like as a broader design primitive that I think you're gonna see a ton of. The power to attach wallets to any existing Web2 account and having money to accrue to someone who hasn't yet logged in with a wallet is a very, very powerful on-ramping mechanism. So that's just one example. But I think stablecoins are a key part of this, and you're just gonna see a ton of interesting things from that.
It's like that saying, have it be blockchain without visibly blockchain, right? It's the,
Yeah, and who's gonna say no to creating an account when there's $100 waiting for them, right? So this is a way to get retail and people on board.
Right. Classic Coinbase. Daryl, thoughts on, introduce yourself and thoughts on that, and anything maybe specific to Singapore, because obviously you guys are one of the leaders.
Yeah, so Daryl here, I'm the general partner at Thrive Digital. We're a Singapore licensed venture capital firm, and we've been in the space for the last 10 years already. I think it's kind of similar to what you guys just mentioned earlier, right? I think stablecoin, in terms of winners itself, has got to a point whereby, if you haven't noticed it, or you probably wouldn't, it's a lot of the payments companies or even ride-hailing firms, because we've invested in ride-hailing firms before. The underlying payments infra is actually powered by all these famous chains like Polygon, Avalanche. If you actually look into that as well, and the users who are typically retail Web2, non-Web2 native folks, they don't even know that it's being powered by that. So I think everyday traditional finance is moving, inching closer towards, adopting, I would say, blockchain as a technology itself. I think even in Singapore, our ride-hailing firms like Grab or even payments companies like Alipay, they're all using powered by blockchain already. So as a country, everybody realized that if we can reduce your costs, increase your transactions itself, why wouldn't you do it? So I think that's kind of like more in terms of the evolutions. But one of the things that I always ask is like, do you actually need more stablecoins infra, right? I mean, just look at how many types of USD stablecoins we have, but you always go for the two that's popular, right? So I think that's going to be the same case with any other currency across the world itself. And I think one of the biggest points is not just about, just because you have custodian attestation report, you get to be a stable coin. You have to answer the question, which is, why would people want to keep that particular currency itself, right? Like, why wouldn't you keep Japanese yen and all that? So I think that's something that we all have to first agree, which is what are the underlying products that's being powered? Because stablecoins at the end of the day is just a means to an end. So that's my answer to it.
So like interoperability aside, which is obviously the key component in all of this, is there an argument for every country should have their own stablecoin similar to their own currency? And then let's just start at the strongest, you being from Singapore with some of the strongest money, and we're here with the yen in Japan. Do you argue it's too much if 195 countries have their own stablecoin? Or should at least the G7, G20, whatever, have theirs, and then interoper, the similar way of currency exchange?
Yeah, because it's decentralized, so that it means that it's a global currency from day one, right? So the whole idea of stablecoins, it's that cross-border payments is supposed to be much more simpler. Whether or not it's beneficial for the country, that's a separate question altogether, right? But if we're talking about from a utility standpoint, the position is that there shouldn't be so many currencies anyway.
I want to hear
Please.
your opinions, because now when I travel around the world, like last year, 15 different countries. This year, already 6 countries I visited and I invited. And not everybody talking about stable coins anymore, but still in Japan, every conference, like right now, talking the hottest topic is a stable coin. And now, and it's good, but I'm just curious your opinions. like four major companies making a stable coins in Japan. And what's your perspective? What do you think about it? This country, do we need like many or stable coins?
Please, anybody jump in, but my 2 cents is that you're also in one of, if not the most mature economies in the world, right here in Japan. That's why I asked about Singapore. Very difficult for a third world country because they're also very risk on. It's a scary thing to do a stablecoin. Even in India, one of the largest economies in the world, it's very sensitive because of their microloaning and microfinancing side, where $1 a day, $2 a day is going out to billions and trillions of amounts. So to do a stablecoin, it's actually not a good thing. It's not a good time, which is why they've been off. China's another story, right? But anybody else, you two have a thought on that regarding stablecoins?
Yeah, I can talk about that a bit. The funny part is, like, I'm coming from a macro background, so thinking about the yen, who wants to own yen? That's the thing. Even the Japanese don't want to own yen; they want to own dollars. So that's a macro problem. So when you say that, yes, 4 companies doing stablecoin, that may be a lot. But and after that, when you talk about stablecoin, we think that we talk about the consumer, but the consumer may not care about the stablecoins at all. He may not want to hold. We are talking about, this is what is the move at the moment, going from either the token and the product to the rail, the infrastructure, what is capturing flow, reliability, productivity. And this is where the stablecoin on the back end will be very interesting. It's mainly for, I think it will be more of a B2B tool. A lot of central bank has been looking at the stablecoin as well. Is it something that we could replace in our policy, monetary policy? For now, it was not, because it was still very costly. Because seriously, in the TradFi world, you can trade $100 yen and it costs you $100. When I say $100 yen, $100 million years, and it costs nothing to trade. The cost is very minimal, and it's not replicable yet, or it was not because of the chain we're having and the reliability on the chain. But now that it's made possible, this is something that will increase productivity, efficiency, but as an asset, does it has value? Not much more than owning dollars, I will say, or owning yen. So owning it, not necessarily, but as a product to make the rail very efficient, yeah, for sure.
Yeah, well said.
Well, total market value today for stablecoins is around 316 billion as of today. And to answer your question earlier, I don't think all of the fiat currencies needs its own stablecoin because the number one utility for the stablecoin is still trading. And as for trading, the biggest thing is liquidity. You need all of the professional market makers to provide liquidity for every single pair for the tokens that they trade with those local currency-backed stablecoins, and that's just like not possible. And I think like for countries like Korea, for example, and Japan, if you have regulated exchanges with the license, be able to just trade with Japanese yen pair or the KRW pair, and think liquidity itself is not the biggest problem. However, for countries like Turkey, because they're a local currency, like the value changes can be like 40% a day. That's where the need is coming from.
Yeah, that's what makes it so risky for the smaller, and some of them aren't small, like the Nigerias of the world, that creates some headache. I'm gonna switch gears a little bit, because we do have an AI conference upstairs, and I think we would be remiss not to talk about that industry, because if we're going to talk about capital flow, and the statistics are ranging between 40 to 60% of blockchain or digital assets, VCs have now moved their capital into AI companies or startups. And I'm sure that is a very relevant topic for them. It's what's hot, but it's what's answering as well. But I'll leave you with, I'll say a cool story from one of the biggest digital assets VC, A16Z, Mark Andreessen. He gave a AI $50,000 in Bitcoin. And first of all, has anybody heard this story? All right, look it up. I'm not gonna say the whole story. It's very funny. Truth Terminal, Mark Andreessen. $50,000 was given to a gentleman who created an AI based off of a knowledge base for this gentleman. It was extremely eccentric. It was extremely offensive. It was extremely funny. So he said, I'm going to give it $50,000. It created a mind of its own. It started to fork. It started to hire other agents. And then actually it wanted to hire the owner, a human. So that was a very quick story. I'm going to let you read it up. But they do have a mind of their own. And they are now using that money, which is crypto, digital assets, to buy back humans in this case. And so what does that mean, right? It's the intersection of blockchain, which is the financial language for AI. It's the tech layer, but it's what is possible to make AI armed. So if these agents are going to now really solve for problems on their own, they're going to need to be armed, and they're going to need to have money to do that. The only way to currently do that is through wallets, digital asset wallets, crypto wallets. And so that is extremely powerful, not terrifying to me. I think that's extremely powerful for what's about to come in the next 18 months, because if you're going to arm them and give them parameters to solve different problems, imagine what they can do. So do research that, you'll have a good laugh, and then let your mind think about the intersection of these two industries and how you're going to benefit. I'm sure 50% of this room has some type of agent, either working for or with them. It's a toss-up. Thoughts about that and arming your AI with blockchain, with crypto rails? Too touchy?
Well, I mean, I think if crypto has always been for the unbanked to some extent, then the agents are currently unbanked, right? And so as an interesting side effect of that, like we're seeing that crypto makes for really good rails for agents. I do think that this space is tricky to invest in right now, because I think that there's sort of a lot of speculation because people are very excited about it. But I think it's also very clear that this is like a great use case for crypto. And so what I'd like to just learn more about, and I'm trying to spend more time on, is like what are the legitimate use cases of agents where they're going to be spending money and beyond the protocols, like what are actually the use cases, right? So there's a startup called Rent a Human that went extremely viral for similar reasons, where basically agents can go to this website to rent a human. Because there are many things that agents can't do that people still can do, right? And so the idea is you create a marketplace for human labor that agents can access. And actually, like the original sort of MCP and AI configurations they had were using crypto. So I think this is going to be a space that is big in the coming years, for sure.
Yeah, agreed. Please.
Yeah, I guess AI has an unfair advantage comparison to crypto. I remember myself, the first time I was in front of a wallet, what do I do? And like when 2-3 years ago, where you were in front of ChatGPT, straight away you could see, wow, this is fun. So definitely there is a global knowledge that this is something disrupting, which not everybody has this knowledge on the crypto side. I would say, fortunately or unfortunately, will crypto be as big as AI? I don't think so. Crypto will be the rail. It's obvious now. So it's a bit like math. Like for centuries, we are creating some, especially when I talk about really fundamental math, we're creating formulas and we don't know yet how we will use them. And it's a bit the same story for Bitcoin. It was a beautiful white paper, and we had experimented what could be the use, payment, whatever, creating community stuff, things that had not been working, NFTs, and we find the first use case, which was stablecoin, which is obvious. And now, definitely, I think for me as well, this is this rail for context, for AI, for payment. It's an obvious, but this will be the rail for AI. AI will be the product, and crypto will be the rail. Yeah.
Any other thoughts on the AI side before we move on? So obviously the rail also requires guidelines, parameters, and be soon coming regulations. Anytime you're going to have to arm these guys with crypto, certain countries are going to put their parameters in place. Just the other day, Claude is cutting their API to OpenClaw, right? So that's not the crypto story, that's just a AI to AI story. Some of them are going to remain like Apple and IBM closed-end systems. Some are going to be open source forever. A topic like DePIN is also front and center. Quick thoughts, if any, but not just specifically DePIN and physical infrastructures, but things like my affinity to BitTensor, Tau. Decentralized compute, the cost of compute is extremely a sensitive topic. And what's costing Silicon Valley $60, $70 million to solve a single issue, someone like a subnet in BitTensor can do it with 1 or 2 million because of the power of the network. Any thoughts regarding decentralized physical infrastructures or compute?
Okay, I'll answer that. We're the first round investor for Aether. We like the project a lot because it's one of the few companies that actually generate revenues every year. Even in bear market, we're able to sell 30 million worth of GPU. The token itself has value because of this. And so like not just depend, but any projects actually be able to make good cash flow and have real utility of the token. I think is going to be a true winner in every sector in crypto.
Well said. I'm going to do a fire round. We have about 2 minutes left. Short as possible answers or one word, and we're going to try to leave some value for you. This is a lot of questions on a lot of minds. I asked this of a beautiful AI, so don't take this from me. These were the most popular things that spud out. What is the country that you're most bullish to deploy capital or as it pertains to startups and founder headquarters in the coming 18 months? Which country? We'll go down the row. You could say biasly Japan.
Yeah. I mean, I'm an investor in Japan, but of course I'm an American, so it's hard to pick, right? But San Francisco's had a huge comeback. There's no question about that.
So Japan, San Francisco,
US.
U.S.
Japan, make Japan rich again.
US still.
Yeah, US.
Oh, interesting.
Don't be boring. Why US? You know.
I mean,
You guys are here. What are you talking about?
We'll start the other way down. The trend that you're most focused on as an asset class, industry sector, or investable opportunity within Web3?
Right now, RWA.
RWAs.
And a little bit on AI. Yeah.
AI cross crypto in a telco sector.
Deep in, but also some of us talking about blockchain is broken. So looking for quantum computing after AI and blockchain.
Not a sector, Bitcoin. It's because I think the good buy point is going to come out in May or June.
The intersection of AI and gaming.
For me, it's Bitcoin yield generators and anything payments in Asia. Last question, quick answer. What, other than the blockchain, AI kind of meta trends that have gone on, what's the next one? What's after this? Go down the row.
Well, everyone's saying single-person companies. Like from my background, it's single-person game studios. So I think we're just going to see an explosion of high-quality content in games that we haven't seen before. Kind of like what short-form video, what TikTok did for short-form video.
Payments.
Love, families, friends, stronger than Bitcoin or blockchain.
Emotion.
I will talk to like an investor, defense.
Well, in Japan, so just look at trading cards. It's kind of interesting. When you look at the stats, it's more insane than some payments.
For me, physical AI. So let's close it up. And, this does feel like the end of the beginning for our industry, right? Did you catch that? The end of the beginning, not the beginning of the end. Because it can be seen that way with the but the takeover of AI. But it isn't. It's the end of the beginning. It's more mature, it's ready, it's faster, better, stronger. And if you're not in it and in the game, you need to be in any sense of the word. So thank you for your time, thank you for your energies, and thank you to the panelists. Do connect with everybody.
Thank you.
Thank you. And you know what? AI means love in Japanese. AI means love. So love is the answer. World peace. Thank you, everyone.